Everyone, welcome back to Energy Captains. It's been a while since we recorded. Turns out that Cam, my lovely co-host who's back with me today, had a baby while his wife did.
Yes.
So before we dive in and introduce our guest, can you please share the amazing news? Because, I've gotten to be with you when you were dating Aranique, and then you got engaged. I was at your wedding. And so, it's basically our baby at this point, all of us. So anyway, it turns out that babies are time consuming. So that's why there's been a delay. But please tell everyone the amazing news.
Yeah, Whitney, I appreciate that. Baby Luna is here. I got a photo of her right here at the beach. She's a cutie. She's 5 months old as of yesterday. So it's been a blessing. It's the hardest thing I've done and the most rewarding thing. So I'm excited to talk about fatherhood, of course, with our amazing guests. And yeah, it has been a journey, Whitney. I'm excited for her to meet the family as well. I know you met her already, but I'm excited for her to meet the other Tampa family. And we're here now, Energy Captains in the flesh, excited to pod with you, Whitney.
Okay, and before we dive into the amazing guests that we have today, I have to ask, at what age do parents stop introducing their kids by number of months? So people are like, this is my son, he's 137 months. I'm like, okay, so is he 5 or 15? What age do we start just saying it in years so I can understand how old your kid is?
Well, really, when she reaches 12 months, that's when I'll stop. When she hits 12 months, I'll stop there. But like I said, we'll probably get more advice from our guest, Whitney, because he mentioned his child is 36 36 months. So excited to see.
What I'm saying, it's just been a burning question in my mind. I can only ask a parent because it becomes its own language. I'll run into someone, they're like, my kid is 72 months. I'm like, what? So how old is it? Can you speak a language I understand? Anyway, okay, to dive into our amazing guest, we are so excited to welcome Spencer Gareiss. Spencer has and is currently living a number of lives all in one. I will let him dive in and tell his own story, but just as a quick overview, he was instrumental in building a ton of key products at Robinhood. He owns his own brick and mortar business. He's working on a venture capital firm, and on top of it all, he's building, and this is why I wanted to bring you guys together today, he's building a really cool new platform that's going to be such a game changer. It's called Market. The URL is investinathletes.com, and it's basically a stock market for athletes. So the way that you can normally go on E-Trade or one of those companies and, say that I think this company's stock is going to rise, you're going to be able to do the same thing on Market. Should be launching late summer, early fall. And the cool part is that the athletes themselves benefit. So in most, sports betting these days, people win or lose, but the athletes, who are the reason why these platforms exist, don't benefit at all. But the really cool part of Market is that athletes get paid for their participation. And I know, Kim, for you, we always worked on building your brand off the field, trying to create as many revenue streams as possible. So for someone like me, who's such an advocate for athletes and, the people that they are and making money outside of sports, I was really excited to hear about everything that this company is bringing together. So Spencer, why don't you jump in and tell us a little bit about your journey? We can always chime in if we have any follow-up questions, and then I will let Cam take it from there.
Yeah. Thanks, Whitney. Thanks, Cam. Thanks so much for having me on the pod. This is my first podcast, so I'm super excited.
You're already killing it.
First pod in my life, hopefully of many. Whitney, you nailed the intro. And I think the 18-month mark is where you've got to move to a year and a half.
Burning question. Thank you.
Just to nail the icebreaker. So in terms of my history, I grew up in Indiana and then went to Arizona State, studied finance, and I started my career at Vanguard in fund management. And then I went to Robinhood in 2021. And as you mentioned, built a ton of crazy products at Robinhood. So co-founded Robinhood Derivatives LLC with a great team. We built futures, prediction markets, the fastest growing business in Robinhood's history. Led a bunch of product and engineering teams through other builds like equity shorting. Launched futures in the UK, so did some international operations as well. And all the while was building my family. I've got an amazing wife, Amy. I've got a 3.5-year-old son, Alex. We've been in Chicago, Dallas, all over. We're in Texas now. And in December, I joined Blockchain Market Inc., the company you were explaining, Market. And we're building a really exciting platform where fans can invest directly in athletes. And as you said, finally, when fans win, athletes win too, which is really exciting. Building an athlete-first platform, and excited to hear Cam's take on it. We've heard lots of great feedback from current players. I'm curious, kind of post facto, off the field, how Cam feels about it, and maybe what he would have done with the company back in the day. So I'll pause there and we can kick things off.
Yeah, that's awesome. Congrats on that. Couple of things. As an athlete, you mentioned moving to Texas. I wonder if you moved to Texas for the tax purposes. That's my question one. Is that the reason why you moved to Texas?
It was a big part of it. I do love the tax regime in Texas. Definitely better than the Chicago area. My wife's family is from Texas. The weather's wonderful down here, so we like Texas.
Nice. Yeah. My pops is in Houston, so I feel you. Even though Houston, I think it's the hottest place I've been in besides Miami, Houston, like Arizona, top 3 hottest places. But no, that's really cool. And you mentioned the future space. And I know Whitney worked at the MLB before, but the MLB just signed a deal with Polymarket. You talk about futures. Can you break that down? You talking about working at Robinhood, the future space. Like, what is that?
Yeah, really interesting.
And Spencer, I have to apologize before you move on because I didn't nail the intro. I also left out that you're in the army on top of, like, you're like a cat who has 9 lives, but instead of sequential, they're just all at once. So, thank you for your service and all you've done.
Yes, especially,
we know what's going on in the world now. And so we just want you to know we appreciate you. And please tell us, about that side of your life too. I don't understand how you do all these things at once, but also it would be helpful if you could just walk us through how Market works and what it looks like, especially compared to some of these other platforms that Cam has mentioned.
Definitely. Several questions there, so I'll try to remember to hit all of them. I did forget to say I'm a captain in the Army Reserve, been in for 10 years. I'm wrapping up my first book, so that should be live in April. It's
nice.
About a 200-page chapter book called Mental Models. And I want others to have the tools that I've had to achieve the things that I have. Which
Congrats.
Yeah, thanks, Cam. Comes down to the mental models, really. In the subtitles, how to think, act, and win.
Awesome. Whitney has a book too, by the way. Sorry, I should have plugged that in. Whitney has a book too, and there might be a second on the way, but I just wanted to plug that in really quickly.
Thank you. Actually, Spencer already ordered it.
Yeah, you're the first you. Great book. Love that. And Cam, to answer your question on futures, MLB CFTC agreement was really interesting. MLB is really leading the charge on the innovation side, and we like MLB for Market as well because the contracts are guaranteed income, which is different from football. So it's less risky, if you will, for retail investors, just because it's more clear what the earnings will look like. So futures are derivative contracts. They're regulated by the CFTC and NFA. And
what are those? Sorry, CFTC, NFA. Sorry, what are those?
Yeah, CFTC is the Commodity Futures Trading Commission. It's the derivative equivalent of the SEC.
Got it.
And then NFA's National Futures Association, they regulate it as well. That's the securities equivalent of FINRA. So anyways, highly regulated businesses, and futures started because corn farmers wanted to hedge their risk. If they were going to harvest in 6 months, they wanted to lock in prices today. So it's a contract with a future expiry and a future price. So I won't bore you guys with too many of the details, but it was a really complicated build, and prediction markets was quite a bit simpler, which is why I think they've become so popular with retail investors. Just a binary contract. You trade yes or no, and the outcome's quite simple. So I feel, the last question, Market. So you're asking more about how Market works. So I'll keep it as simple as possible. We're IPOing athletes, so retail investors can purchase shares in what's called an athlete stock company. So when Cam was on the field balling out, if we would have entered an agreement, we could have said, hey, Cam, we want to buy 30% of your income for the next 3 years. And as you earn that income, you would pay the money to the athlete stock company, and the retail investors, athlete stock company investment would go up in value. And what does Cam get for that? When we enter this agreement, Cam's going to de-risk all of his future income because we're going to give him a cash advance today. In football, there's injury risk, there's career risk. The average career is 3.3 years. It's much longer for a top 10 draft pick. It's about 9.4 years. So being able to de-risk, trade risk, injury risk, and get that cash today is huge, especially because so many more athletes are getting sophisticated, starting their own ventures, and really building a life off the field and after the field. And that allows athletes to pull that timeline in. So it's pretty interesting.
So Spencer, essentially, say Cam is still on the Rams or the Bucks. Let's go with the Bucks because they're in Tampa. And that's where we met. So he comes to you and he says, hey, I'm interested in, having my stock on the platform, on market. Then what happens after that? Does he get a check? And then what is his stock based on, whether it goes up or down?
Yeah, great questions. So if Cam engaged, first we need to underwrite Cam because we need to figure out what his deal size is. So we would project out his income out up to 10 years. And then we determine how many years Cam wants to enter an income purchase agreement for and what percent of income he wants to do that with. So we can do 10 to 49%. We really want the athlete to be able to have control over what the terms are. So we're flexible on our side, 3 to 10 years, 10 to 49%. And based on their projected income, based on comps for their position, et cetera, then we can make an IPO offer. And that includes a cash advance for their on the field income. We protect the off the field income. So we aren't touching their ventures, real estate investments, endorsements, even just on the field salaries and bonuses. Then we have a marketing fee. Because our platform is going to grow by being in partnership with these athletes, and they already, Cam's got an audience. So we see value in that. We pay a marketing fee to the athlete as well. So it's, in a sense, it's a marketing deal too. And then the last piece is executive compensation. I mentioned how athletes are becoming more sophisticated earlier. We really want to give them a chance, to be a board member on that athlete stock company and get that experience. And we compensate them as their athlete stock does well. So there's 3 components to it. When the athlete agrees to the IPO offer, we file a registration statement with the SEC. The SEC has to qualify the offering because these are SEC regulated products. Once the SEC approves it, we list it on the platform, and then the retail public buys those shares of Cam stock. Once the IPO is fully subscribed, it begins secondary market trading. So buyers and sellers can trade the stock between themselves.
Wow. So I want to ask you this. When it comes to the unions, do you have to navigate the sport league unions? And then second to that, like NILs here with college athletes, are you going to have to deal with the NCAA? Like, what does that space look like?
Yeah, great question. So for listeners who aren't aware of NFLPA, MLBPA, NBAPA, no surprise, those are the big 3 sports that we're interested in first. There's collective bargaining agreements or rules. They're structured as unions. So Cam, to answer your question more directly with that context, the team is not able to pay the athlete stock company directly. The team pays the player still. So the player is still getting a standard payment. Then the player pays a trust. And the trust has a trustee, and the trustee ensures that the accurate percentage of the athlete's earning go to the athlete stock company. So it allows us to work, in compliance with the collective bargaining agreements. And it also ensures that the investors are getting the accurate percentage of earnings. So that's how we're working within compliance with the PAs and the unions. And then on the NIL side, it is, it's gotten way more liberal than it used to be. it's incredible that college athletes are being able to begin earning, 18 to 20 years old while they're in school. And in a lot of ways, it encourages them to finish school. Back in the days, you remember, you'd declare for the draft and you'd get drafted before you'd finish college. And then you got someone, Jerome Bettis, an incredible player, goes back to Notre Dame after he finishes his time in the league, which is a beautiful story too. But I think it's great seeing what NIL has done for empowering students to make money, especially because these athletic departments have been making tons of money off of their performance for so long. So it's great that athletes are able to get some of that too. And we're constantly working within the rules of the respective leagues and, NIL or PAs, et cetera, because without regulatory compliance, we can't sustain ourselves as a business. So it's definitely top of mind.
Got it. Thank you for that.
And one thing I loved about, when I first met Spencer and learned about the company is that not only are they really amazing human beings doing cool things, but they make sure first and foremost to do everything the right way. And I think a lot of things that are thrown an athlete's way, don't always smell right, or a lot of stuff out there just doesn't follow proper compliance rules. And I think this is a game changer because they're making sure that they're doing everything the right way.
Definitely. Yeah, you mentioned an interesting point, and the way we've been thinking about the business too and the evolution over time is we really want to empower them to be successful human beings. And once we give them this huge cash advance, we want to make sure that they do well with that. So we're exploring other offerings too, whether that's advisory services while they're playing, insurance services, disability, whatever it may be, because we want to make sure the athlete is covered from a risk standpoint. And then when you get, $20 to $50 million offer, how do we help the athlete turn that into $100, $250 million instead of squander it, on Lamborghinis and ice, if you will. So it's definitely something we care about.
No, that's awesome. And you mentioned something interesting, right? You mentioned that the players put the money towards a trust. So essentially, it seems like that trust is protecting everybody. And I know Whitney's in a family full of lawyers. And so can you just describe why the trust and and you mentioned a cool thing too, right? Athletes having some advisory support and everything like that, but why the trust to protect everybody? What does that look like?
Yeah, the trust is a critical piece. And if you studied really wealthy families, they almost always have family trust. So in a sense, we're inadvertently setting that athlete up, if they don't already have a trust, with a family trust, which is critical for them ensuring that, again, once they get this huge cash advance, they're thinking about structuring things for growth as opposed to just spending it lavishly. And so in an altruistic way, it helps the athlete and their family, but also for a retail investor, they're putting up their money as well to invest in the athlete. And the trustee is ensuring, as a trustee does, that all parties in their agreements are being honored. So it's just a piece that has to be there.
That's awesome. That's awesome. And sorry, Spencer, one more question. So you know how sports betting has become legal in these past few years. Sometimes athletes, they'll be at a bar or restaurant and a fan will come up and be like, man, I bet on this game that you would do this and that. You didn't do it. And there would be some type of conflict. When it comes to market, when it comes to, you mentioned retail investors investing in some of the athletes' stocks, do you foresee any of that those issues in public and people investing and putting their hard-earned money on some of these athletes' futures?
I like to think that we won't have that happening. A big part of sports betting and prediction markets, there's zero-sum games, meaning if you wager $100 on it and you're wrong, you lose 100% of your principal. So zero-sum outcome. And they're generally short expirations, meaning on that game on Sunday, if Patty Mahomes doesn't throw 4 touchdowns, he only throws 3, and you're mad at him for it, that's not going to happen in this case, because if Patty Mahomes throws 3 touchdowns on Sunday his stock value is going to be going up.
Mm.
And it's intended to be more of a invest and hold instrument, and it doesn't expire until they retire. So,
Whoa.
there may be intra-season, intra-game downside volatility. If Patty Mahomes throws 2 picks and fumbles it, it might slide 0.8, 1.2%, but you're not going to lose 100% of your principal off of that. So I think in general, the people that are putting their money behind these athletes should experience less anger if a game doesn't go so well.
It's actually way safer for athletes because a bad day doesn't define you or affect the person who's investing, because it's like you can lose the battle but still win the war. No pun intended, since I know
that might be a quote line for you right there, Spencer. That's why Whitney, that's why you get paid the big bucks, because you come with those one-liners. That was excellent, actually.
Thank you. Well, and no pun intended, since he's actually in the military. But you can have a really, really horrific day on the field, but it's this particular company really represents the athlete for who they are over the entirety of their career. So one bad day doesn't mess up a parlay like a sports betting app would. It's about saying, hey, I think I really see that the future is going to be bright for this particular athlete.
Absolutely. And a key difference too, if the investor or trader or bettor hits on a bet or they win on a prediction play, they make money, but guess what? Athlete gets nothing. In this scenario with what we're offering, when the investor wins, the athlete's making money. For the first time, we're offering an instrument where the first person who gets paid is the athlete, which is super groundbreaking, and that's what gets me excited.
So, wow. Spencer, tell us, I mean, it's probably obvious to you, but for people who are listening who may not know, what dictates whether an athlete's stock goes up or down?
Yeah, so in any market where there's trading between buyers and sellers, really the market price is determined by supply and demand. Meaning, if there's more buyers than sellers, the price goes up. If there's more sellers than buyers, the price goes down. So that's just market price dynamics. In terms of the intrinsic value of the actual athlete stock company, of course, as the athlete's earning money, that's coming back to the athlete stock company, and it's increasing what's called the NAV, or the net asset value. So a holder in the stock could redeem their shares with the athlete stock company and not sell it to a buyer. So that's actually increasing in value. There's also accounts receivable, meaning the expected future earnings of the athlete, which is reflected in what we call the GAV, or gross asset value. And then 2 other pieces. We have what's called a brand equity index, which is a proprietary algo. And that's where I was mentioning, as in the Patty Mahomes example, depending on, completions, yardage, touchdowns, or on the downside, fumbles, interceptions, it'll change the gross asset value depending on that player's performance, because it does imply their future earnings, right? Because if they continuously have good games, you can assume that they're going to get an extension contract that's larger. If they have bad games continuously, you could assume that that's not going to be the case. And the last piece is what we call a popularity index. It's a really cool piece of the product that we've built, also really altruistic. And this is where trading, we charge trading fees. And as we collect trading fees, we're actually kicking some of those back to the athlete stock company. So the more popular the athlete stock gets trading wise, the value is actually going up with the athlete stock company that they're investing in as well. So also pretty.
Spencer's way too humble, because when he says all these things that we've built, what he means is that I've built.
It's about we, not me.
Yeah,
that's right. There's no I in team.
That's real. And Spencer, so there's a couple of terms that have flown across this screen. I'm like, oh, let me Google that. Let me look that up. So I'm curious, 2 things. One, what's the masterclass going to look like? Like trading 101 for like an athlete who knows nothing about the stock market, who knows nothing about some of these terms. what's the education portion look like for this space?
For capital markets and stocks in general, or for market and what we're building?
For market and what you're building.
So we really try to educate the athlete while we're going through the deal process. And you'll be able to appreciate this. There's agents involved. There's generally a financial advisor involved and often a lawyer involved. And if they're close with their family, brothers, sisters, fathers, mothers, uncles, whoever it is. And so, when you approach market initially, it's not a quick LOI signature and then we're IPOing. Generally, it's multiple in-depth conversations where we're walking you through all of the granular details, answering your questions about risk, answering your questions about mechanics, because we want to make sure that the athlete and their loved ones and support system and advisors are all fully bought into this. So it's a team game, and it's a robust conversation.
And if I say, I bought stock of, some quarterback that was going up against Cam, and I'm like, nope, Cam's my guy. I hate this quarterback and I want to sell their stock because I'm Team Cam. How quickly do I get my money back?
If you're redeeming for NAV.
For what?
If you're redeeming your shares for the NAV or net asset value.
Okay.
Generally, we'll do that within 1 business day. So we keep cash in the athlete's stock company so that, like a bank, when people come to withdraw funds, the bank has to keep money for that. Same principle, the athlete stock company custodies cash so that we can redeem within 1 business day. If you want to sell in the market to a buyer, you should, assuming there's liquidity in the market, you should be able to sell, real time, and then the funds would settle and you would get the cash.
And are there unlimited shares of stock for each athlete? Like, can as many people buy stock, or does it close out of a particular athlete?
So the limit per athlete based on Reg A plus Tier 2, which is the SEC rule, is $75 million. And we're going to be IPOing 1 million shares. So $75 per share would be the max price at IPO. And then, of course, it could go up from there. So to answer your question, 1 million shares, there will be fractional shares as well. So if you don't want to buy or sell 1 whole share, you could buy or sell in dollars. So as little as $1.
Wow. And I know that, we mentioned that the platform is going live late summer, early fall, hopefully in time for football season. So what can people do now if they're interested in maybe being first in line, or just, get, as soon as you guys are ready to launch, that they're able to dive in and start purchasing?
Yeah, great question. Our wait list is live, and we also have a great referral program set up. The top prize is all expenses paid trip to the Super Bowl, which is quite exciting.
Oh,
wow.
Yeah.
In LA next year.
Yeah, in LA. So it's going to be a good one too. We were in San Fran this past year, and I love San Francisco, but I think maybe I'm more excited for LA.
Yeah.
It looks like you agree. So anyways, the wait list is live. You can go to investinathletes.com and join the wait list, refer your friends. We really, really appreciate the support. And then as soon as we go live, you'll be the first to know.
Wow.
Amazing.
Wow. Yeah. And my last question, I know we could talk all day about this. I have so many questions, especially about some of the acronyms, but you mentioned, so I just looked it up, the stock exchange, right? It's open from Monday to Friday from 9 to 4 p.m., 9:30 to 4 p.m., whatever it is. And so for this space, do the athlete stocks go up or down even during the off season? So you think about like Max Crosby's situation, right? Played for the Raiders. He goes to the Ravens, about to sign, but they don't sign him because his knee is hurt. Like, does the stock drop immediately after that? Like, what's the time frame for people to cash in or cash out?
Great question. It's going to trade all year round. So yes, if you got injured or in trouble in the off season, or if you got a contract extension or traded, whatever it may be, your GAV would increase or decrease, and your market price as well. If buyers rush into the market or if sellers rush into the market, that market price would change. We're not only going to support trading during the season, we're going to trade year round. And
Wow.
you alluded to market trading hours. We definitely want to have 24-hour trading, so it's trading around the clock too.
Whoa.
I have one follow-up question for each of you. Cam, I'll start with you. If Spencer came to you as while you were playing and, explained what market is and now everything you know now, what would be your reaction?
I'd be like, this is awesome. I think I would also ask about, you mentioned the up to 30% of the check. And so is that 30%, is that mandatory? Like, hey, we need 30% of your check, or can you do any amount of your check from the team?
Any amount. We can do as little as 10%, and we can do up to 49%. So I suppose if you were really passionate about wanting to go above that, we could, but part of our messaging is that we don't ever want to take more than half of your check. And really it's up to the athlete. In a sense, how much of a cash advance do you want today? And how much do you want to de-risk your future earnings? And so the minimum's 10%, max is 49%. And then the minimum number of years is 3 years, max number of years is 10 years.
Got it. A minimum number of years, that means them being in the league for?
Minimum number of years for the contract would be 3 years.
Oh, got you. Okay. Got it. Okay. Yeah. That's a question I would ask. And then at that point, I'm a little bit more conservative. So I would, hey, put me in for the 10%. And then as that time progresses, then I would add some more for sure.
And just curious to follow up before I dive into my last question for Spencer. What would something like this have meant to you at the beginning of your career or throughout your career, just knowing there was sort of a backup plan?
Yeah, it would have been great because you mentioned a trust, having something for my family. We're actually looking to get a trust going for ourselves right now. We're in a real estate space. We want to get the trust going. So the fact that the fact that market would be able to put me in that mindset as a rookie would be amazing. Like you mentioned, instead of buying ice or buying the Lambo, put your money in market, and then that money can then feed your family's family. So I think that's number one for me. And then I think second, like you mentioned, your stock can go up or down during the off season. I think that's even more incentive for athletes to really act right. So for example, a lot of times during OTAs, spring football, the coaches says, hey, work out, have a good time, but don't end up on the ticker tape. And so I'd imagine if people end up on the ticker tape, that means their stock drops. So I think market could be a great incentive for guys to really act right during the off season and not end up on the news. So
I like it. Accountability system. That's good.
Yeah, exactly.
Yeah, it's like a babysitter.
Yeah,
for athletes.
Exactly.
Okay, Spencer, my last question for you, and then I know everyone has busy lives and little kids, so we won't keep you for too long. I've learned a lot, so we're super appreciative of your time and coming on. And this is a whole new ball game, and it's just cool that we can find another avenue for advocating for athletes and looking out for them. But I guess I have a two-part question for you. How are you building this company? You're in the Army, you have a small child. How are you doing this all at once is my first question. And my second question is, you've had the ability to see the forest through the trees and really be an innovator in your career and to join and build companies that are going to the moon, for lack of a better, analogy. And so what was it about market that drew you to them, and why are you so passionate about them, considering your history of really keying in on innovative companies?
Yeah, great questions. The first one, you got to be a little crazy. An entrepreneur or a builder and innovator, you have to be a little crazy. And that's, setting your mind on something and doing whatever it takes to achieve what you set out to do. Time management is intense. You see my calendar, Whitney, and every 15, 30 minutes is blocked off from 6 a.m. to 8 p.m. And I care about being a great dad and husband. So outside of work, it's the same way. I take that very seriously. And the second piece, I always try to see around the corner. I think that's critical, as a trader, investor, in managing your career. You got to see around the corner. And, building futures, building prediction markets within Robinhood, that was because of seeing around the corner and putting myself in a position to do those things. And, I was building prediction markets in my basement before they were cool. And now everyone knows about them. And so hopefully market will be the same way. And what got me excited was, my co-founder, Ben, he was pitching me on the vision and what he wanted to build. And it seemed sufficiently crazy and innovative. And I really need a crazy, innovative vision. And it has to sound really hard. I run towards huge challenges. So it just got me super excited to build something that the world has never seen before.
That's cool. And my last one, you mentioned seeing around the corner with your career. I'm currently going through that right now, right? There's a lot of reorgs. There's different things going on. So I'm trying to stay ahead of the game. You mentioned seeing around the corner. What's the prep look like to see around the corner? What's like that consistent daily task that you do to kind of see around the corner?
Good question.
Thanks.
Great question. I think table stakes, you have to have your finger on the pulse. Like you mentioned the MLB and prediction markets or CFTC deal, like you only know about those things if you're constantly reading on what's the latest. If you don't know what the latest happening is, you're just inadvertently going to fall behind. The second piece, constant deep research. Like you mentioned, looking up the acronyms. Like I spend hours and hours of my day just doing deep research, ask why, then why, then why, second, third order. And then the third piece is the strategic foresight and applying what's currently happening, what's the deep research, and how can I position myself, put yourself in a better fighting position so that not just now you're in an advantageous spot, but in 3-6 months, you're going to be in an advantageous spot.
Man, I'm looking forward to reading your book. That is going to be a good read.
I appreciate it.
Will you come back on when your book comes out? And, since you're like such a big deal in all these different realms, just don't forget about us. Like, hopefully you'll come back and still be willing to be seen with us.
I will always come back to my first podcast. I would love that. That sounds great.
You would never know this is your first one. You're a natural. First of many.
Yeah, I hope so. It's been
awesome.
Amazing.
Well, thanks for being our teacher today. And it sounds like you don't do boring. And also, kids, do your homework. That was the advice I took away from you.
Yes.
We so appreciate your time. And yeah, everyone can go to investinathletes.com and click on the waitlist, sign up. And, you're only gaining things by doing that and by referring. And you have nothing to lose. And then you can see all that Spencer's done. You can see the artwork of Picasso over here.
And the book when it comes out.
Yeah, exactly.
Yeah, thanks Whitney. Thanks, Cam.
Thanks for joining, Spencer.
Cheers. Have a good one.
Take care.
Cheers.